Hi, this is Matt from Mortgage Alliance, and today I'm going to tell you how the new mortgage rules will affect you in 2018. So, the Office of the Superintendent of Financial Institutions, OFSI, has introduced new mortgage rules to take effect next year, effective on January 1st, 2018. OFSI is setting a new minimum qualifying rate or stress test for uninsured mortgages. So, that's any mortgage with a down payment of 20% or greater than their home price. The rules now require the minimum qualifying rate for uninsured mortgages to be greater of the 5-year benchmark rate posted by the Bank of Canada, presently at 4.99, or 200 basis points above the mortgage contract holder's rate. The main effect will be felt by first-time home buyers. No matter how much money they put down as a down payment, they will have to pass a stress test. The effect of the changes will be huge, resulting in 20% decrease in affordability, meaning a home buyer will be able to buy 20% less house in the future. So just to run a few different scenarios to how this breaks down. First of all, if you're putting over a 5% down payment or anything less than 20% down payment, no changes, everything's going to remain exactly the same. You still have to qualify based on the mortgage qualifying rate. You still have to go through everything the CMHC requires, so no difference there, so that's fine. If you're putting down more than 20% before you qualified on the contract rate, not anymore. Now you need to qualify based on the mortgage qualifying rate or the contract rate plus 2, whichever is greater. Looking early reports, most people are going to be qualifying on contract plus 2. So if you're doing a 5-year fix, let's say a 5-year fix right now is at 3.4, for example, it would be 2 plus 3.4, so you're looking at qualifying at 5.4. Generally speaking, though, you're going to get about 20% less than what you got last year. So let's go through a couple of scenarios. So first of all, you're putting in 20% down payment. You're going to get, in terms of a home amount, you'll be able to purchase about 20% that you could purchase right now. So as a quick rule of thumb, if you have no debts, perfect credit, everything's great, approximately you're looking at about 5.5 times your income as a rough estimate for what you can be able to qualify. Conservative approach is about a 5 times maximum, so $100,000 household income would work out to about $500,000 worth of mortgage approximately. Now if you're refinancing, if you're renewing, if you want to change mortgages, change lenders, you will need to qualify on the new stress test if you are switching lenders. So if another lender offers you a much better rate than what you have currently, but you are unable to qualify for that particular mortgage lenders, you will have to stay with your current lender and take whatever rate they're willing to offer. So essentially, if you can't qualify under the new contract rate, if there's been any changes to your financial situation where you won't be able to qualify for those new rates, the new qualifying rate, then it will make it difficult for you to switch lenders. So if you are looking at renewing your mortgage, getting a better rate, it is a good idea to do it now before the changes take effect, and that way you don't have to worry about trying to qualify under the new qualification rules. If you were very tight in terms of your qualifying originally, it may be very difficult for you to switch lenders in the new year. If you are looking at refinancing, if you have debts to pay off, if you have renovations to complete, if you're doing a major project, whatever it is, if you want to look at getting funds for investments, whatever it is you're looking at doing, you need funds, you will be able to access 20% less funds in the new year as well with these rule changes. So let's say you were able to qualify for 7 times your income previously. You bought a house for $700,000. You've based on a $100,000 income, you pay down your mortgage to $500,000. You now need to refinance your mortgage to get an extra $50,000 or $100,000 to pay off debts, to do renovations, whatever it is. Under the old rules, you can do it. You can get access to those funds. Under the new rules, you may not be able to get access to the funds you need to be able to pay off your debts. do your renovations. So if you need to do those things as well, right now is the time to do it. Now, already major financial institutions have already taken these new rules into consideration and are effectively using them immediately. However, we do have quite a few lenders that are still using the old rules and are able to get you to qualify under the old rules as well. So make sure to message us for details on that. Also, if you are unable to qualify for a mortgage, if you cannot qualify whatsoever, the bank says no, you have run out of options. We do have qualifications available for almost every type of borrower. If you have limited, no down payment, bad credit history, bankruptcy, consumer proposal, whatever it is you have, we usually have answers for you and can find a lender that meets your criteria. So make sure to leave us a message on Facebook, and we get back to you within very quick time frames. We have people working around the clock to answer your questions. If you have any questions, concerns, comments, make sure to message us. We're trained professionals who've been in the industry for a number of years, and we're definitely here to help. Thanks for your time, and let us know if you have any questions about the MQR.